On this video, I'm going to tell you guys about the top 6 dividend stocks, in my opinion, to hold for life. Dividends are just like free money that a company gives you just because you've been investing with them. So every 3 months or sometimes monthly, a company will just send you free money as a thank you. Now, these dividends are a percentage of whatever it is that you're invested into the company. And so the more capital or the more money that you actually have invested in this company, the more of a dividend you're going to see every quarter. The goal is going to be to get as much capital in there as possible. Now, you really want to be careful because there are some companies that are promising something like an 11, 20, 15% dividend, and those are usually companies that you need to be a little bit skeptical about. Just remember that it's always correlated to the price of the stock. So if their stock goes down, then you're going to lose money. Remember that 20% of zero is still zero. What's up, you guys? I am Nolan Govea, or Professor G as my students know me. I'm a professor and I specialize in personal finance, and I do all the research on this channel so that you guys don't have to. Let's talk about dividends. So number 6 is going to be Lockheed Martin Corporation, LMT. Lockheed Martin is by far the largest defense contractor in the world. Even in the pandemic year, global defense spending increased. For 2020, defense spending was $2 trillion. It's clear that the sector will continue to grow even with macroeconomic headwinds. And now, especially with conflict in Russia and Ukraine and just conflict overall, defense spending is not going away for the United States. Looking at their actual stock, we have a price today of $447.78. It's down a little bit, so it might not be the worst time to look into buying. We're looking at a 2.58% dividend yield, which is $11.20. So what that means is if you buy this stock for $447, within the year they're going to pay you back $11.20. Now, most companies pay quarterly, so in this case you'd be looking at about $3 every 3 months. Now remember, you still have that $447 that you're invested in the company, and that's still there. This is just extra money that they give out just for saying thank you. And so you can see that if you keep adding money in, that dividend gets bigger every couple months, and eventually that turns into a nice little paycheck that's extra on the side. Another important point to note is that Lockheed has been increasingly diversifying outside the United States. This company is not going away anytime soon, so it's a good stable company for you to park your money and just keep making that dividend. So real quick, if you enjoy content like this, please consider subscribing to this channel. And actually, if it's specifically dividends that you're interested in, I have a pretty good knowledge knowing that I'm a professor and that I like to do this research. But I actually follow 2 guys that I would definitely recommend you checking out their channel specifically for dividends because they go even deeper than I do. Number 1 would be JJ over at Dividend Freedom. I would definitely highly recommend checking out his channel. And then number 2 would be Ryan Williams. Now, if you guys have ever seen my channel, you see that I don't ever do any advertisements and I don't do any shout outs really, unless I highly believe in the people that I'm talking about. So check them out after this video and after you subscribe to my channel. So number 5 of the top companies that you need to hold as a dividend investor for life would be Coca-Cola. KO. Coca-Cola has just been incredibly consistent, and when someone like Warren Buffett highly recommends you and backs you and has been invested in you in all these years and now is worth millions and billions of dollars, it's definitely a company you want to pay attention to. And if you just think about it, what other options are there other than Coke? What, are you going to drink a Pepsi? Come on now. So looking at the company today, we are at $62.56, which is up a bit, almost 1%. Looking at the dividend itself, it's about 2.84%, which is huge. So every $62 that you put in, you get about $2 back over the year. Now, something that I absolutely love about Coca-Cola and dividend investing in this company specifically, they've increased their dividends 59 years in a row. That's sweet as a dividend investor, because if you're already invested and it goes up, you get to reap that reward. So Coca-Cola is one that I think is a staple for any dividend portfolio. Number 3 is going to be Target, TGT. In the cutthroat discount retailing world, Target has consistently proven it doesn't have to compete on price to win. For years, it's proven more profitable than its peers with some of the highest gross and operating margins in retailing. At the same time, its focus on increasing its e-commerce business and expanding in-store offerings has kept sales and profits growing. With dividend growth at 49 years and counting, dividend investors should put Target at the top of their shopping list. If we look at Target today, it is up a bunch. It's up 2.5%, up to $224.93. We have a dividend of almost 2%, 1.8. That's about $3.60 every year, which is a very solid little bonus. Now, the reason why I think Target is one that you're going to want to keep forever is because they just keep growing. Target has done an exceptional job of bringing in their private label brand, and people don't even hesitate to buy that over the competitors, which means they can keep their margins very, very big so that they can keep selling things at a low-ish price and make profit, which is good for you as the investor. So that means that the stock price will go up, which means you'll make money in appreciation there. But then also that means that the dividend's going to go up because you're making a percentage on the stock price. The next company coming in at number 3 is Microsoft. Now, Microsoft is a behemoth, it's a giant, and it's just a company that I think that everyone should have in their portfolio no matter what. But this dividend is just a nice little bonus on top of it. And today it's up at around $300 per share, which is almost 2% up as well. That dividend is a little bit lower, but remember at the beginning of this video I said we want to hold certain companies that we just know are going to be around forever, because even if it's a smaller dividend on something that's going to be around forever, that's way better than something like a huge dividend on something that could possibly go out of business. Now, Microsoft has a 19-year streak of dividend increases, and Microsoft is making plays to join in on that metaverse. I can just see things going crazy for Microsoft soon. So again, this is a play to hold on to the stock for the appreciation of the stock, so you make money there, but then also you get that extra dividend every couple months. Not bad. Coming in at number 2 for me is going to be Lowe's. The average US home is 37 years old. That means that a lot of DIY projects are coming soon to these houses. People are going to need to upgrade things that have been built a long time ago, and Lowe's is really one of the only places that you're going to go grab that material. Lowe's is very much positioned for the homeowner, whereas Home Depot is more for construction personnel. And so for that reason, I think that Lowe's is going to appreciate in value, like I've talked about with a couple of these as far as stock price, but also their dividend is going to give you that nice little bonus as you keep going. Now, if we look at Lowe's specifically, they're at $228 for today, up about 3%, which is huge. Their dividend is 1.45%, which is a high dividend, so about $3.20 per year with this price currently. The company's raised its dividend an incredible 46 straight years, and over the past decade alone has raised the payout a massive 471%. Lowe's is one to definitely keep on your radar, y'all. Last and certainly not least, of course, because I'm going backwards, so this would be the best, is, in my opinion, Apple. Apple is a company that I would recommend no matter what we were talking about as far as investing in general. Growth, value, dividend, whatever. Have this company in your portfolio. Today, Apple is up to $166.73 now. It's up over 2%, and their dividend is 0.53%. Now, just like Microsoft, lower dividend, but still a dividend. And so if you think about this company and think about what we're trying to do, which is long-term hold, Apple is a company that continuously innovates. They're in a multitude of things, and their stock price just keeps going through the roof. If this stock price doubles, triples, quadruples in your lifetime, and you're making a dividend on that and you're adding money into it, you're making all that appreciation and a dividend on top of it. It's also worth noting that Apple has products lined up that include virtual reality, augmented reality, and electric vehicles. The business outlook is therefore robust, and Apple has ample financial flexibility to pursue aggressive growth. Apple has proven that it's the king, and it's just a solid investment long term in my opinion. Let me know in the comments what other companies I can look at for you guys. These are my favorite and top 6 that I think for very, very long term, but I'd love to know what you guys have to say. And I'll catch you guys on the next one.